Boom. All right, what's up, you guys? It's Royce Jacob. Welcome back to the channel. In this video, we are going to be talking about why buying the dip and selling the rip, which sounds very obvious, but just wait, might be an exceptionally useful strategy in this current hyper volatile environment. All right, so we're just gonna get straight into it, you guys. Let's quickly go over what we'll be discussing, and then we'll dive in front of us. TradingView, where we'll be taking a look at the SPY today. That's all we're going to be looking at, okay? We got the triple Qs here, but the S&P 500 or SPY pretty much sums up the gist of the equity markets on the charts, okay? So we'll be taking a look at the SPY, talking some downside price targets, and also talking some potential bounce targets, just because we've seen so much carnage over the past few sessions. So give you guys kind of my best case scenario and worst case scenario. You guys know I lean bearish, so get prepared. If you guys don't want to hear the bear arguments, if you guys just want to think things go up to the right forever, peace out. It's all good. Tune in a few months when things start getting bullish again. But for now, we're bearish, and hey, we're making money while we're doing it because we have been super well hedged. And right now, hedges, VIXY, UVXY, SQQQ, SPXU, they're all printing right now. Okay, so just right off the bat, I want you guys to know there are ways to make money in bear markets. You just got to know where to look, and you just got to be a sharky bear, okay? You just got to know how to attack these markets, okay? So anyway, talk to you guys about a few scenarios I see playing out from a technical perspective on the S&P 500 or SPY. But before that, I do want to cover this little article that I actually shared in the newsletter last Friday that I thought was interesting, and I figured it was worth making a video just to put this on your radar. So sell the close, final hour of trading so far in 2022, among the weakest seen in decades, okay? Read over very short paragraphs here, but I just want to show you guys this chart and kind of expand and give you guys my thoughts on how this chart can be useful to you. Also seems obvious, but hey, we're just talking about this together, okay? Just sharing this chart with you guys because, again, I thought you guys could potentially put it to use. So before that, I do want to read through my little excerpt, the little excerpt I wrote on the S&P 500 today, because we do go into some macros, some psychology here as well, just to preface the video prior to getting into everything else, all right? S&P, the SPY, damn. What a comeback. So the comeback, obviously today, you guys, the SPY, the Nasdaq, got absolutely obliterated. It is Monday, January 24th, 2022 at the time of recording. You guys will remember the day because this was one of the most volatile, as you'll see here, one of the most volatile days in the past decade. What a comeback. This was the craziest trading day that the markets have seen in a very long time. In fact, this is one of the best market comebacks in over a decade. This session was the first time since the financial crisis in 2008 that the Nasdaq had been down more than 4% on the session, yet closed the day green. So again, over the course of the day, the Nasdaq jumped over 5%, which is crazy to see in an ETF, in the Nasdaq, in the freaking Nasdaq composite. Okay, the SPY, Dow Jones obviously saw very staggering movements as well. Nasdaq just more tech weighted, so that's why it's somewhere saw a little more volatility. Regardless, the pop we just experienced among the SPY, QQQ, and BTC as well is relieving to many, but I'm still confident that more downside is to come. Really like this quote from Mike Santoli this morning, and I'd like to share it. This is the quote: "Any bounces will be suspect initially. Trends have been wounded. The broad tape will need a repair process, though it is leaving a massive pile of wreckage for stock pickers and potential acquirers to pick through." So again, you guys, you've probably been hearing stock pickers market, which is how the market kind of always is. But in this market, when everything continues to go down, and I just mentioned this in the Bitcoin video I recorded, once there is fear in the air, once the technicals are broken, once the fundamental headwinds are at your face, once you are kind of in a bear market, which we are quickly entering right now. Bitcoin's been in it. Now the equity indices look like they're entering one as well, because again, trends have been broken. Trends been wounded. The tape will need a repair process. I agree with that 100% because it's objectively true. And again, rates are raising. The Fed meetings are this week. There's some global macroeconomic, just macro tensions with Ukraine and whatnot at play right now. And there's just not many reasons that we should, unless a white swan event, you see the gold swan flying through, it's very unlikely that we will see new all-time highs anytime soon in all three of these names and many stocks, if I'm being honest, okay? So from a bull's perspective, buy the dip and sell the rip seems like the only winning strategy at this point, unless you hold hedges, of course. Yeah, let me know in the comments down below if you guys love to see it. Love to see some of you guys talking about how those calls were printing. UVXY calls, SPXU, VIXY, whatever, even shares were freaking ripping today. And I still think those things have a lot of upside ahead of them. So we are in an objective bear trend in a bearish macro environment. The chart below showing 15-minute candles. We're not going to look at that right now, but for you guys in the newsletter, that was what we did this morning. Quants took over and initiated the short-term rally. So you guys can see here, this was what happened this morning. We were in the short-term downtrend, 15-minute candles. Once we closed that first 15-minute candle above this, that's when we started really seeing this start to rip. And we are testing this the previous floor that we saw over here. Probably is a new ceiling, and I do think maybe tomorrow, by the time you guys are watching this, you guys can let me know if this ends up playing out. Maybe we bounce up a little bit, but I do ultimately think more downside is on the horizon. But hey, right here, I do have a bull case scenario in the case that things do pick up over the course of this week. We do see that relief rally, this dead cat bounce turn into a relief rally. But overall, when it comes to the remainder of the month moving into February, I remain bearish. Okay. Really does feel better making money while the markets tank, which in an evil kind of way it does. So I put a little evil smiley face. And the DXY, which is the US dollar index, is moving up. These gains are literally worth more. So again, when the value of the dollar is going up, usually things go down. And again, everyone involved in the equity markets today got absolutely smoked for the most part. And hopefully, if you guys were holding longs, you sold and did not sell into the panic that was this morning. But again, you guys, when the dollar is appreciating in value, most things that trade against the dollar, which is everything, the equity markets, cryptocurrencies, depreciates in value. And again, when you're hedged, when you have these anti-bull instruments like VIXY, etc., and they go up while the dollar is moving up as well, those gains are literally worth more because those dollars that you're making, those gains you're seeing in your portfolio are worth more, okay? So, again, plug time, you guys. If you do want to know how I'll be trading the rest of this week, because I'm going to be gone for a few days, not going to be here, and might record a video on Friday, but we'll see. But again, I'm going to be gone. I'm going to be out of town, out of the lab for a few days. But I will still be writing the daily newsletter every trading day. That's my obligation to the OG members of the newsletter portfolio group. Exactly as it states, complete breakdown of my entire personal portfolio, which I do update every single trading day during market hours, and send out an email newsletter explaining my thoughts. This is part 2 of the newsletter. I send out part 1, which is the intro, giving my general thoughts on the market environment, the trades I made that day, rationalizing my trades. And in part 2, I cover, this is like the S&P 500, went into Bitcoin, the Nasdaq, etc. Okay, throw in some charts and thoughts on specific names within the markets that are relevant to that day of trading. Okay, so $15 a month, $40 for every 3 months. Really appreciate it if you guys check that out. If not, no worries at all. I appreciate you watching right now. And again, please give the video a like and let me know in the comments down below what you think about this current environment. Are you a buyer? Are you a seller? You bullish? You bearish? Let me know why. And yeah, look forward to talking to you guys downstairs. Anyway, let's take a look at this, guys. So U.S. stocks are off to a rocky start in 2022, with shares often selling off in the last hour of the trading session. Quote, on average, U.S. equities have rallied into lunchtime, but there's also been heavy selling late into the session, Bespoke Investment Group said in a note Thursday. So we can take a look at this, you guys. Maybe zoom in on this guy a little bit so you guys can see it better, which is actually the opposite of what happened today. If we go back here, you can see that over the course of the day, gap down heavily, gap down super heavily. Fear, this is usually a few hours into the trading day. That's when you see the most volatility or the high or low of that session. Same thing you can see here. This is the average day, around 12 p.m. Eastern time. Okay, 6 a.m. Hawaii time, wherever you are, you know the time zone differentials. Around noon is when you see kind of the highest level of volatility. So in today's case, that same time is when you saw right here, I guess. Around that same time, I guess it was 7 in this case. So you guys get the gist. Within that hour or two span between noon and 1 p.m. Eastern time is when you usually see the greatest movements, okay, or the highest, the peak low or the peak high. That's just kind of the general rule of thumb. Not always, there's caveats, but just, again, you're playing the odds here. That's what kind of trading is. And I'm not saying I've been day trading this. If you want to day trade this, have at it. You can have it trying to optimize profits, but that's why I personally, as a swing trader, like to focus on the more medium term. But hey, it's still fun to watch the tape over the course of the day as I'm writing the newsletter, and just it's just exciting in this market, okay? But regardless, that's why if you guys do want to try to optimize your profits, even though I'm not personally implementing this, may start over the coming days, may try to mess around a little bit, but nothing too crazy, not putting my entire portfolio on the line here. But just know this, and this is important to know, not only for for day trading. But in a swing traders, in the context of if you want to apply this to swing trading, knowing when to buy or get in or get out of a longer term position, longer term talking week, 2 weeks, maybe a month, maybe a couple months, right? Or when you want to optimize profits for that longer term swing trade, this is good to know. Just again, these times of the day when you're seeing heightened levels of volatility, because in this case, again, this is the average day. Today we saw the exact opposite of that because everything absolutely tanked over the course of the day. So over the course of the day, tanked and then ripped up. And you can see here, bounced and then ripped down. So the point of this is not that every day is going to look like this. Although this is the average day, this is what most days look like. Maybe we'll probably see this tomorrow if I'm being honest. Little relief rally up and then ultimately tank over the course of the end of the day. The thing is, again, there's just peak levels of volatility around 12 to 1 p.m. Eastern time. And then from whichever way it's going, if it's going up, if the volatility is to the upside, we're probably going to tank over the course of the day just because we are in an exceptionally volatile environment. And if it's keep going to that one, if it's going down, we're probably going to go up like we just saw today, or I guess yesterday, because I'm going to be posting this tomorrow morning. Okay, so just keep that in mind, you guys. For the S&P, I'll just give you guys what I think could play out over the course of the week, because once again, I'll be gone. But hey, appreciate it if you guys check this out. Keep you posted every morning with whatever goes on. This is all just guesstimation, you guys. That's ultimately what it is. You're just trying to do the best to play the odds in your favor with the data you have available to you. That's just the game of trading. Okay, so best case scenario, I do think for the SPY is to come up. 4-hour Stokes are curling to the upside. That is bearish. Or I'm sorry, that is bullish when it comes to the short to medium term. So that's kind of nice to see. Might get a breath of fresh air in the short term. Best case scenario, I do think the SPY could retest this previous level support on its long-term ascending channel as new resistance, TA 101. That could take us up to January 28th, up to about 455 on the SPY. Saw a little bounce, ultimately, which I do think will be followed, because that is still, if we do come up to 455, I don't think we're breaking above that, you guys. If I'm being completely honest, I think that is best case scenario. 455, if we see that, I'm loading up on even more hedges. It's very likely, at least. I do think we will start to make our way down once again to lower lows, because that will still set in a lower high on the overall downtrend. Lower high, lower low, and I do think ultimately we'll come down to at least $400 in the SPY. Almost came down to my initial target of 420. Just today we got down to what, 421, so super close to my initial target, which is this high over here, reversion to the mean around 420. But I do think the SPY will likely come down to here. I think this will be around here, because this also coincides with this purple trend line. Not going to zoom out because we're on the 4 hours, but this trend line right here is a very, very, very significant line of both support and resistance on the SPY's long-term uptrend. So I do think this will come into play. I do think the SPY ultimately, whether it takes a couple of weeks to play this out, I do think by mid-February, we'll say mid-February, I do think we will see at least another 10% of downside in the SPY, and I'm expecting at least 400 to be hit, maybe even lower, maybe get to like 390 to 400. Okay, so that's a SPY. Oh, of course, you guys, because the Bitcoin's because the Nasdaq's correlated, because Bitcoin's correlated to the SPY. If the SPY sees downside as kind of the king of the equity markets, it's just the pinnacle of what the equity markets are. It's pretty likely that their Bitcoin and the triple Qs will see downside as well. Okay, so just prepare yourself, you guys. Again, VIXY, UVXY, SPXU, SQQQ. There are ways you can make money in bear markets if you're bearish as well. Again, I'm not saying you're gonna make money, but if you think the markets are gonna go down, I would highly recommend looking into some of those hedges. All right, so don't say I didn't warn you. Could be wrong, but always know my money's where my mouth is. Let me know in the comments down below what you guys are doing, how you guys are trading, how you guys are attacking this current environment. If you guys are sharks, you're feeling sharky, you know the waves fam can be sharky. So let me know what you're doing, let me know why, and I look forward to hearing you guys' input downstairs. So catch you down there. Till next time, always remember, take action, make waves. Peace.